Hello there. Welcome back to Financial Accounting in 5. In this video, we want to look at the calculation of accounting ratios. So we're going to look at question 5 of this question paper. And it reads that the following information was extracted from the accounting records of a trader on 20th February 2015. And you are given extracts from the income statement. So beneath that, it reads, after the capital account had been credited with the above net profit, the balance sheet reflected the following balances. So the balances that are given beneath there, they are balances of uh, that you are given for the period. And then beneath that now, you also give additional information whereby the first additional information that we have reads credit sales represents 60% of total sales. So what does it mean? It means if you say 100 minus 60, you're going to get your 40, which is going to represent um, your cash sales. So this representation is very important. Then we've got number two, saying credit has allowed 3 months credit. So 3 months credit in particular means that we are saying on average every month is 30 days. So if you say 30 times 3, you are going to get your 90 days. So it means the credit term that is there is 90 days. So we go to the last part, which is saying similar industries in South Africa have a top turnover rate of 3 times. So you can just take note because we might be told to interpret in the question, and then we apply that. Then on the required part, we are now trying to see what questions do we have. So we're going to start by looking at the first part of the question. We go there, you'll see that 5.1 is saying calculate the following of the business for 2015, the first year of trading. 5.1.1 gross profit percentage on turnover is the first ratio that we want to calculate. So we're going to put down the formula first and then we calculate it. So we are saying, if we come here, so talking about 5.1.1. So we are going to calculate our gross profit percentage on turnover. So we are saying gross profit percentage on turnover. So the formula that we are going to use is gross profit over turnover. Gross profit over turnover. Times 100 over 1. Obviously, we're going to leave it as a percentage. So we go there now to check in terms of what figure for gross profit do we have and what figure for turnover do we have in the question. So if you come here, you'll see that we are not given the figure for gross profit, but we can find it. Remember, when we calculate gross profit, we say gross profit is equals to our sales, and then we subtract your cost of sales. Cost of sales. So in this case, our sales, we've got 217,750. We subtract our cost of sales, which is 124,430. And then the answer that we are supposed to get there is 93,320 as your gross profit. So this is our gross profit. That is going to be our numerator. Then denominator, obviously, we are going to use the figure for sales. This is our turnover. Total sales figure is turnover figure, which is 217,750. So we are just going to substitute those figures in the formula that we had there. So we come here, we say 93,320. 93,320. We divide by 217,750. We multiply by 100 over 1. Right. We calculated as such. You're going to see that the answer that we are going to get there is going to be 42. For the 42, comma 8564. And then we are going to round it off to the nearest two decimal places, whereby we are going to look at a figure behind 6, which is 6, which is figure behind 5. We have 6, which is going to change our 5 to become 6. And then we have what 42, comma 86. Remember, it's a percentage. So 42.86% is our gross profit percentage on turnover. So we go on to look in the next question. We come here, we see that the next question is saying debtors collection period, which is 5.1.2. So it's saying debtors collection period. So it's very important to take note that it's saying we should express our answer in days. So remember, on average, we've got 365 days in a year. So we're going to use our 365 as the number of days that we have in a year. So we go there and we try to bring down the formula for calculating data collection period, whereby we are saying it is equals to average data, and then as our numerator, then we divide by credit sales. And then after that, we multiply by 365 days. Remember, we are expressing in days. If we are supposed to express in years, we are in months, sorry. If we are supposed to express in months, we are supposed to multiply by 12 over 1. So in this case, let's go and identify average data and credit sales in the question. So for average data, we are not going to find the average because we are only given one figure for data control, which is for the current period, which is 36,400. So if you had another balance for data for the previous period, we are going to say this figure plus the figure that we had for the last period, then we divide by 2 to get the average. But in this case, we are just going to take this figure, 36,400, as our average data. Then credit sales, we are given a hint here in terms of 60% of total sales are for credit. So we can say 60% of the total sales figure that we are given there, then we get credit sales. So we come here, we are saying our total sales figure is 270,750. We multiply by 0.6, which is 60% as a decimal. Then we can find the figure for credit sales, which is going to be 130,650. So this is going to be our denominator. So we go there and just substitute as such. So here we are saying average data figure that we got there was the data figure that we have for the period, which is 36,400. We divide by the credit sales figure that we have, which is 130,650. We multiply by 365, which is 365 days in a year. And then if you calculate it correctly, you're going to get 101, 6915. And of course, these are days, so we can round up to the nearest whole number, whereby we have got a 6 here, which can change our 1 to become 2. So we have 102 days. We have expressed in days. So this is what we have in terms of the second part of the question. Then we can go to the second section, whereby it reads, various options are provided as possible answers to the following questions. Choose the answer and write only the letter A to D next to the question number, that is 5.2.1 up to 5.1.5. Obviously 5.2.5 here. So having said that, now we can go to 5.2.1. The formula for solvency ratio is, we know that when we are calculating solvency ratio, we use total assets as to total liability. So this one is expressed as a fraction, so obviously it's going to be total assets over total liabilities. As simple as that. So what we are going to find out what figure do we have for total assets and what figure do we have for total liability. So we come here, we are saying these are the figures that we have. So we are going to pick our assets here and find the total. So our assets, we are going to see that we've got land and buildings is an asset. We've got equipment at carrying value, again, it's an asset. Capital, it's not an asset, it's not a liability. We leave it. We go to long-term loan, it's a liability. And we go to investment, it's an asset. We go to current assets, that's the asset for current assets. So beneath that, you're going to see that we've got creditors control, which is a liability. Debtors control and the bank, they are current assets. So it means, what does it mean? It means they are inside 134,900. So we're just going to leave them. They are part of the current assets because we are given a total for current assets here. So we can add this one plus this one plus this one plus this one. Basically, we are saying, let's just try to see. We are saying 218,400. You add your 41,300. You add your, we have 54,600 here. And then we add here again, we have got 134,900. Then you can get the total for assets, which is going to be, you can try to calculate there, whereby we are saying 218,400, and then you add your 400, you add your 41,300, and then you add your 54,600, and then you add your 134,900, and you are going to get your, let's try to see what do we get there. Let's try to calculate and see what exactly do we get, which is about 440 something. So here, and we are getting a total of 449,200. So this is our total assets. Then for total liabilities, we are saying we have identified 59,200. And we are adding again 75,600. We calculate again to see what we get, 59,200. And then we add 59,200, and the next one 75,600. And we are getting 134,800. So this is going to be your total for liability. So you can just check there which response we have, which is having that. So let's just try to see. So you see that we've got B. So it means our answer is B. Then you go to 5.2.2, which reads the formula for asset test ratio is, we know that for asset test ratio, we are calculating the ability of a business to meet its short-term obligations, and we remove the stock, because stock cannot be easily turned into cash. It's not a very liquid current asset, so we subtract stock. So we look for a formula that is subtracting stock, and we are seeing that it's on C and D. Let's start with C, current assets minus stock as to current liabilities, which is correct. Then this one is total assets minus, which is not correct. We are supposed to say current assets. So this one is out. So we are left with C. So C is the correct answer that we have there on 5.2.2. Then 5.2.3, return on owner's equity is equal to return on owner's equity. So the formula that we are going to use for return on owner's equity, we are going to say we are going to say our net profit that we have over our capital. So let's try to see there what do we have in terms of our net profit. So our net profit, we've got 54,430. 54,430. Then we divide by our capital, which is 314,400. And then obviously we multiply by 100 over 1, so that we leave it as a percentage. So here we are saying we are multiplying by 100 over 1. So we are saying net profit 54,430, 54,430, and then divide by our capital 314,400. We multiply by 100 over 1. But obviously we have one answer there that is expressed as a percentage. We try to see 54,430, and then we divide by 314,400. And then the answer that you are supposed to get there, you multiply by 100, you are supposed to get 17.31234. So obviously to two decimal places, we've got 1 here. 2 is not going to change our 1, so our answer is 17.31%. So we are having that answer on C. So we got C as the correct answer there. Then we can move on to see what do we have next. So on the next question now is saying the firm had a stock turnover rate of 2 times per annum. So what interpretation is correct or appropriate according to this turnover that we are given? So obviously, when we're talking about these ratios, for us to be able to interpret them, you might use the previous year's ratio and compare it with this year's ratio and see if there's an improvement or it has worsened. And then you can also use some firms that are in the same industry with us and at the same level with us, so that we can see to compare, are we doing better or worse than what our competitors are doing. So here we've got two terms. So we'll go back to the question to see what hint are we given in the question that we can be able to interpret this stock turnover rate. So in this case, we are given it as two terms, but we can go back to the question to see what hint are we given there. So in the question now, you'd see that we are given that similar industries in South Africa have a stock turnover rate of 3 times. So this one is more than our stock turnover, which is being set, is assumed there to be 2 times. So here we can now say ours is less than those in the similar industry. So when the greater the rate of stock turnover rate, the more liquid the firm is. So we are saying when the stock is bought, it can easily go out quickly, and we get cash. So the more liquid it is. So if you've got a more stock turnover rate, it means you have got a better position of stock turnover rate. So as we have got a lower stock turnover rate, so it means we are worse than similar industries in South Africa. So the correct response that we have there is that this is worse than similar industries in South Africa, which is A. So we go to the next one, 5.2.5. After calculation, it was found that the business paid their creditors after 80 days. Obviously, we are going back again to the question to see what hint are we given in the question that can make us be able to interpret this ratio. The assumption is that we have 80 days. We pay our creditors after 80 days. So we go to the question and see what is the payment period that is allowed by the creditors. So if you come here, creditors allow 3 months credit, and we've converted it into days, it becomes 90 days. So we are within the range. We are paying less than the credit term, which is 90 days. So it's acceptable. We go there and see which response is explaining that. So if you go to 5.2.5, you'd see that B is saying this is acceptable for the creditors, which is correct. So you've got B as the correct answer. So this is what we have. Then from there, we can now try to see if we have got still another question that we can attend to. Let's just try to see. So this last part of our question, which is 5.3, which reads, write the answer to the following questions in rand or rand value. Then next sentence, no calculation must be shown. So they just need final answers there. The value of total assets is, we've already calculated that value, remember, and we got 449,200. So you can just go back there and try to just summarize in terms of how do we arrive at that figure. So we are saying we've identified our assets. So we are saying 218,400 plus 41,300 plus 54,600 plus 134,900. And the figure that we got was 449,200, which is this one. So we are just going there and put that figure. So we are saying 449,200. So remember, the question is saying write the answers to the following answers in rand value. So it means if you don't put this rand, you're not going to get any money. So you go to the next one, cash sales equals. We also have a hint in terms of calculating this cash sales in additional information. We can just try to see. They are saying credit sales are 60%, so which means cash sales we calculated and said is 40% here. So we are going to use our 40% to calculate the figure for cash sales. So we come here, 40%. So we are now saying the total sales that we have we have 217,750 as the total sales. So to get our cash sales, we are saying 0.4 as our 40% multiplied by 217,750. And the answer that we are supposed to get there is 87,000 rands 100, like this, 87,100 rands. So this is what we have in terms of our cash sales. So we can just go there again and state as such. So we are saying 87,100 rands. Then current liabilities, we go there again. We did calculate that, but we can just go back and try to show where can we find that figure for current liability. Current liabilities, we've got only one item that we have there, which is creditors control, which is 75,600. So this is the figure that we can only put there. The other liability that is there is a non-current liability. So 75,600 is the figure. So we come here. So here we are saying 75,600. Then we've got stock. Stock equals. So remember, we are not given a figure for stock there. If you look at it, there's no stock there in our list of balances. There is no stock there, but we can find the figure for stock. Remember, we are given the figure for current assets. Stock is part of current asset, and it's 134,900. So what we can say is we have got 134,900 being the figure for current assets, and we are saying stock is inside that figure. But we are only given for debtors control as a current asset and bank as a current asset. So if you subtract these two, we get the figure for stock. So we are saying minus 36,400, and then you subtract also 33,600. Let's try to find out what do we get there. 134,900, and then you subtract 36,400. And then you subtract again 33,600. So you're going to get your 64,900. So this is going to be your figure for stock. So remember, the question is just requiring an answer without any working. So we can just go and put that one. Stock is equal to 64,900. The last part, operating expenses equals sales is the only income. So we have sales only as the income. So operating expenses, remember, when we say gross profit minus operating expenses, we arrive at net profit. So we're going to find out about these figures, these two figures. If we have them there, then we can be able to find our operating expenses. So we go there. At the beginning of the question, we are given net profit is there, and gross profit, I also calculated it by saying 270,000, we got it as 93,320, whereby we said sales minus cost of sales, and you get your gross profit. 217,750 minus 124,430, and you got 93,320. So gross profit 93,320, net profit 54,430. So what are we saying? We are saying gross profit. We are saying net profit. Sorry, we are saying net profit is equals to our gross profit minus operating expenses. So our net profit, we have it 54,430, equal to our gross profit, which we also have 93,320 minus operating expenses. So we make operating expenses sub with the formula there. It becomes operating expenses is equals to 93,320 minus 54,430. Let's calculate it as such. You're going to see that you are going to get your 38,890. So this is going to be your your figure that we are looking for operating expenses. So you can just try to subtract there to verify this calculation, 93,320, and then you subtract your 54,430. 38,890 is the answer. So this is what we have. We can just go back there again and enter that figure. So here we are saying the figure that we have is 38,890. So this is what we have according to this video, guys. Hopefully this video was helpful. Let's subscribe and share. Let's share the link. And we wait again for the next video to come as we prepare for exams. As for this video, I'm signing out. We meet again.